Right, hello everyone. Today I'm doing a video so that we can grasp and get our heads around how the swing day, the swing hour and the PST come together. I've done a few videos on these before, but this is going to be a bit more specific so we can cover all the angles together. Now, as you know, at the GlobalTrader.Club, for every week we got the swing days and the swing hours: Monday, Tuesday, Wednesday, Thursday, Friday. And for every day we have a video, okay, except sometimes there might not be a video on Friday, like as in the case, because I do work Monday to Fridays. So here is how we bring the swing day, the swing hour and the PST pricing together. Okay, so this is really important for us to understand, because then we can really have bingo trades, right? So swing day, whatever you're trading, doesn't matter. The first thing you need to understand is that we've got swing days. So swing day, what is the definition of a swing day? The swing day is not a long-term trade for us. At the GlobalTrader.Club, what we do is we're trading intraday, or we're keeping a position open maximum a few days, maybe from swing day to swing day. You can keep it open for the whole week if you want, if there are 2 days like Monday and Friday, like as in this example, right? Last week gold had Monday and Friday, so from a swing day Monday it went all the way into Friday. Or you can close the position at the end of the day and add on to your position, or open new trades every day to go into that next swing day. So a swing day is not a long-term vision of a market turning and taking off for days or weeks. Well, I can say days here, but like weeks and months, definitely not that kind of a swing trade. When we have a swing day, this is why we can have 2 or 3 swing days even within a week, because the market can go up, down, up again, or it could go down, up, down again, and so on and so on. What we want to catch on a swing day is a turn or a breakout. So swing days have 2 kind of possibilities. One, the market's going to turn around. So if it's at a support or resistance, or it's at a price where we want to trade with a bias, or sell or buy, then we can expect a reversal. Or it can be a really good push day, right? So the market can kind of like push it in that direction, and that could be like a PST breakout. Being on a swing day, that'd be like great. So we just like to push it all the way to a target, and that'll all be like very good for us. This is why we're using technical analysis and timing at the same time. So that's swing days. All right, so 2 options: we're either going to turn around, or we've got a good push flow day going towards a target. Then we've got the swing hours. Now, as you can see here, you've got swing hours there, right? That's for Monday, Tuesday. Now, I post these in advance, so you can see here like the whole of March is already there. Let me get my face out of there. Okay, let's put it here. As you can see here, you've got all of March there, which includes all the swing days and all the swing hours here. Okay, so as you can see, so if you go into anything in the past or future, you're going to get the swing days and the swing hours. Once you get the swing hours, what you want to do is obviously you want to mark them in on your chart. So for example, okay, this is gold. So this is Monday, right? This is yesterday. Okay, so I've got the swing hours. If you want to sell a high, you can sell from the highs, sell. If you want to buy, you can buy from the lows at the hours. Okay, the whole idea of trading hours is because we want to trade at a low or a high, or at a decent price, whether we're buying or selling, and do it at the right time. So the saying, being at the place at the right time. So here we want to be at the right price at the right time, and this is how things work out. So for example, last week, because I have this up here, okay, this is 10th to 15th of March. Last week we had Monday, Friday for gold, right? So let's take a look at Monday and Friday for gold. So this is Wednesday, this is Monday, right? Now remember, Monday is a swing day, so the market comes nice and easy down into a Monday. Now Monday was also a swing high, so I did say you can sell the high, buy the low. Why do we want to buy the low as well? There are two arrows here. Isn't that confusing? No. Why? Because we had a PST price. Remember, PST was right on the line last week, giving us a price of 2,884. Okay, having said that, we also had 2,880 on the daily PST. Okay, so that had a good price there as well on this day, and we were okay to trade it because it was an okay position. It was actually a target, I think, because the line should have been like that, but you can check the video. Okay, so we probably had this, okay, and the market came down into a blue dotted line, probably a target, and then turned around. So if I know PST price levels, if I know the swing day, if I know the swing hour, when they come together, it's a bingo trade. Okay, so that's Monday, as you can see, until Friday it just kept going up, up, up and away. Okay, and Friday was a swing day, so the market stopped. So Monday to Friday, all good. We can now take profit and call it a week. Okay, now within the week, you can also use the trading hours, like I said on Wednesday. On Tuesday, the market didn't really come back to our swing hours, so it just took off. Okay, so there was nothing really to do. But on Wednesday, I did say 4:30 was a good time. So what does that mean? It means I've got an hour, and do I have the right time? Well, if this is an impulse, if you've learned technical analysis from me, you would have been on top of your game. Why? Because that's your impulse. That's the high. That's the low. That's your support resistance zone. Okay, and this is your rectangle. So market going up here, as you can see, is the way to go. Why? Because it's a trade hour, and I actually specifically said on that video 4:30 to 5 o'clock is a good time for the market to turn around. Okay, and then the market goes up. And then Thursday, let's get rid of that. Thursday, the same kind of thing. You can add onto your trade. Why? Because Wednesday, that 4:30, 5 o'clock. Thursday, you had all the hours as well. Okay, so on Thursday, 8:35, 9:20, 1:15. Let's see, 8:35, 1:15. That's your 8:35 there. Okay. 1:15, that's about New York opening up. Not New York opening up, this is going to be no, not yet. New York is going to be down here. Remember, we're doing my time, UTC +3, and then I've got 10:35. I've got nothing else. Okay, look at that. 10:35. The market just goes into 10:35, and that's where you would have gotten out, obviously, if you wanted to get out of the trade. Okay, so as you can see, if we're going up, you want to be trading on the pullbacks at the right hour. If you don't have a right time and price match, you just don't trade. It's as easy as that. So if this was like saying to yourself, well, I don't want to really buy there, obviously not, because you want to buy a low. If it doesn't match, it doesn't match. See, this is a good match. Here, it doesn't match, so let it go. Right? You don't have to trade every day. Okay, so this is how the swing day and an hour and a price come together. Now, the PST pricing is given on a monthly, weekly, daily, and intraday. But I cannot give you the intraday hours, or the prices rather, because the intraday is always going to change, because this is a 15-minute chart, so you can't expect it to stay the same all day. The daily will only change when the next daily bar opens. The weekly will only change when the next weekly bar opens. The monthly will only change when the next monthly bar opens. So the intraday is always going to adjust itself according to whichever time frame you're using. So if you're using, for example, the hourly, you got to check that hourly because things might change every hour. It doesn't necessarily have to, but it might. Okay, so this is why I cannot give intraday pricing. But if you do use it, then you can obviously, for example, look here. You can see the market had a trading hour there. This is gold, and there you go, from the PST level. What would have been here? This is what should have been here. If I was at this hour in the market, I would have been seeing this line here. I would have seen that, right? The blue line would have been like that, okay? So then buying on that line is okay because I'm right on the support line, and then I would have had a price, and that price would have matched, okay? So if anybody bought on that line to go up because gold is going up, okay, then, you know, that was it, okay? But if I change this into a 1 hour chart, you'll see it's going to look different. So the intraday pricing on the PST, on the 80 AM indicator, is something that I can't give when I'm doing the morning videos because, simply because I just don't, you know, things are changing all the time, okay? And this is the hourly, for example, right? So this is how it's looking. Okay, so it will change all the time. I normally keep it on a 15-minute chart, and then every now and then I will check the hourly chart to see how things are panning, and you know, then accordingly I'll decide, obviously with the time and price coming together. So this is like a good example with gold, where we had a weekly PST, daily PST, and then we had the hours to go with it. On Monday, and then all you had to do was just follow it through until kind of Friday, getting into our targets. Okay, obviously it doesn't always have to like go up into Friday like that, but if the trend is going up, it's highly likely. Same thing we can see on the euro dollar as well. Look, last week, let's take a look. These were our swing days. Remember, with the euro dollar, swing days, Tuesdays and Fridays. So this is your Tuesday, this is your Friday, and I did say you could sell from this zone because it's a sell zone and we want to see a bit of a retracement. Okay, so now we've got Tuesday market selling in the evening, Wednesday, Thursday market coming down. Now Friday is another swing hour, and that bounced off the daily PST level at right there at the trading hours. Okay, so if you take a look at Friday, okay, market came to PST level, I think it was 0834 or something. Okay, but you can check out the videos, not a problem at all. And if you take a look at that hour, which was Friday, okay, was it Friday? Yeah, Friday swing day, correct, sorry. 10:05, 11:30, I guess. 10:05, 11:30. That's 10:05, 11:30 is there, guys. So the market comes down nice and easy. So PST price, the time, the price, the move. Nice and easy. Yesterday, Monday, impulse wave, market comes back going sideways. Trading hour, boom. Trading hour, boom. Okay, nice and easy. All right, same all the time. Same. Okay, today, daily pivot zone, market going up. Okay, now on the euro dollar, let's check it out. Monday's a swing day, right? So as you can see, this Monday has now turned into a breakout. Okay, remember what I said, a swing day can turn into a swing or a breakout. So now that we're having this breakout, the market is pushing higher. So what does that tell us? It tells us that if we sold at a trading hour the highs, we would have lost money. But look what's going on. The market never made that green rectangle. Let me put that green rectangle up again. I drew this the other day. Okay, I said this is the zone where we want to sell off. Okay, so now we've got trading hours. Now we're at the tops. Now this is not a bad place to sell off. If you sell here, and a price I did note was 1.0957 today. Why? Because if you take a look at your PST daily, 73 is a price of 1.0957. So I'm okay to sell there, all right? Because yesterday was a swing day. Fine. Okay, Monday was a swing day. And if I get back in, I don't mind selling here. All right, so I don't mind selling it off as well. This zone I said is okay to sell, but as you can see, the price wasn't there at the trading hours. So, but now we're up here, and this is a trade hour. So this zone is okay to sell off, sell off, sell off if we're up there. Okay, now what do you got to be careful about? The breakout. This can now turn into a breakout, which means I've got to be careful here if I want to sell off. Okay, and that's how it is. Now Monday, and what's the next swing day for the euro dollar? Because that's last week. Let's check it out, shall we? Let's do it. Okay, it's Friday as well. Okay, in the club area, you'll know that that's Friday. So this is Tuesday, Wednesday, Thursday, Friday. Okay, so now because we've got this breakout happening, okay, if the market does come back down, I want to go into Friday. Okay, so a bit of a pullback is also okay, but I don't mind selling this zone as well. But against the breakout, not a good idea to always do so. It's not a swing day. Monday is over, okay? And if the market has gone above Monday and is nice and easy going strong up, you don't want to sell in front of it, okay? But that is a good buy kiss. 73, 1.0957. It's a trade that is takeable to sell at trading hours. Okay, I hope that makes sense. If it doesn't, make a comment, I'll go into it. Okay, so this is why PST pricing is important. If I was going long, I would need to know this price. And normally when you check out the charts, you don't get that kind of pricing. So you've got 1.0976. It's also another valid price, which is nice and easy. Fine, we don't mind. Okay, but PST is a special kind of pricing that you want to be on top of. So seeing that on the daily and then marking it in on your small time frame, if the market rushes up there, hits up there, selling is okay, and during the intraday sale it should at least cover your trade. Okay, but usually what we always do is go with the trend. So for example, with gold, we had multiple swing days this week. So I said, guys, this is tricky. This has got room to go up. Why? Because I've got a PST level up there at 77, 3067. And that's up there. I mean, this thing has got room to go. So if we come back down and you want to follow it up into the end of the swing days, it's doable. There's nothing wrong with it. You can do it. It's no big deal. Okay, so that's basically it. So, but what you want to do is obviously wait for a pullback to buy, because you don't want to be buying at the top somewhere. Okay, when we're intraday buying as well, we'd like to wait for a pullback. PST For example, tomorrow we can wait for a pullback to buy to go up. If it doesn't pull back and if it keeps going up, then we know they're going to sell it somewhere because they're going to have to retrace it somehow. Somewhere it's going to get knocked down and that gap's going to be filled. Okay, so this is how you can really calculate what to do. So your bias can be like really, really easy to take care of. Where you're going, how you're going, if you know the swing days, and if you got the swing hours within the swing day and a price, then all you got to do is bring it together. Now, I do give the pricing when I'm doing the daily videos, right? Because not everybody's using the 8 a.m. strategy on MetaTrader 4. And if I do miss out, though, this is how you need to look at it. For example, let's take a look at something like the euro dollar. Now, euro dollar, as you can see, I've got a PST price here. On the weekly, I've got room to go up. You see, these were last week's targets. The market made it. When I've got dotted lines here, they're targets we can go to. And if it's a swing day and a swing hour, I can reverse from those targets going the other way. Okay, just like with the euro dollar when we're going up, we bought from a blue dotted line on a swing day at a swing hour. Right? So that's the same kind of thing when you're selling off. So if the market goes up, we've got room to go into 67. 67 is 1.1072. All right, so this is all nice and easy. Okay, going upwards. So if you want to buy it, then what you're going to have to do is let it come down, close gaps, and shoot up again. And that's basically it. So it might actually sell off, come all the way back to the daily pivot, and then start going up again, which is fine. So understanding the price, the time, and the swing day really brings it together. So on a PST, if I don't mention price or anything, just check the lines, you know, where the lines are and what the prices are. The PST pricing here is based on these lines, right? So if the market falls, for example, I've got blue dotted lines, then those become targets, and you can see those blue dotted lines here. See, I've got like 59, for example, it's 1.0790, okay? So it's got a bit of room to fall if it does come down. The same thing is with a monthly or a weekly. So if I've got a monthly target, it's 58.1172. So that could be your monthly target, and that's fine, okay? So basically, PST is going to give you all of that. And you're going to go to targets, and you're going to discover places where you can sell or buy depending on your bias based on those lines. So treat it like support, resistance, and take profit levels, reversal levels, that kind of thing. So understanding the swing hour, the swing day, and the pricing with the PST is like really, really easy to trade. If you know technical analysis and money management and you're not using 8 a.m., that's fine. If you're not using the 8 a.m. trading strategy, all you got to do is, I don't know, let's open up SP 500. If you know Friday's a swing day, Monday's a swing day. Remember yesterday I said for this, I said, guys, we've got a breakout, so just follow it up to here. And it hit that PST target, 42, tapped it, and then they boom dropped off, because I did say this is where we should be heading. Why? Because look, that's a swing day and we've got a breakout. Okay, this is exactly what I mean. So a swing day can also turn into a breakout if I can see that there's a breakout happening. So we just follow it through, just like push it to the target, and that's pushing it to the target. So SP 500 just worked out like bingo. As you can see, they're all working out pretty good, you see. So even when I'm going up with SP 500 here, if I'm on the next week, if we want to go up, these levels now are going to be like targets to the upside. Same with the monthly, I've got room to come down. You see there's a big monthly breakout, but because this is the monthly breakout, a pullback and then a sell-off again is probably what's going to happen. And look what happened on the monthly target. See how it did even the last one? I had 5,566 on the price, 5,505 on the price on the monthly. It's done them all, and exactly at the target it bought. Okay, so if I go to the daily, let's check it out. if the low of this month, which is right there, okay, which is right there, and the next day is your swing day, Friday. Okay, remember we had Friday for a swing day, SP 500, Friday. On NASDAQ, remember, market did Tuesday. Tuesday was the low of the week for NASDAQ, okay? So that's how it is, and then you can follow it through, okay? So when everybody's like selling, and they're selling the lows, it's a problem, you see. This is why knowing the swing days in advance is important, because if you're at a low point, you want to buy to go up, or you're thinking, well, wait a minute, they might take this up to sell. So even if I am going to sell, I need for it to come up to sell. See, that's what happened on Wednesday. Wednesday was also a swing day. Market goes up and bang, they sell it off. And then on Friday, it's a swing day, so they buy it up. Nice and easy. Okay? And then we'll come to the targets on PST. You get out of the trade and you say thank you very much. Okay, and that's how the PST swing day, swing hours work. All you have to do is also, work on these on swing days. You see, that's Friday. So market goes up, comes down, and just keeps buying, buying, buying into the New York session. I said 8:50, and then I said 10:30 as well. And this is where the market was hanging out and closed off. And then this is obviously Monday, going into the targets, which I talked about on the daily PST just now. And once it touches, it just came. I actually marked this bar as well, that we should be heading into there, and that our profit target is logical. And once the market did it at the trading hour again, look, market did it at the trading hour again. And then you say, okay, we're out of the game, let's reverse, and the market sells off. Why? Because you're at a PST target at a trading hour. It's possibility that they're gonna sell it off. Now Monday is also a swing day, right? So what does that tell you? It pushed us into a target. This can now turn into a sell day too. So if today the market doesn't go above and close above that, okay, then tomorrow we can also think about selling down, and that will bring us to there. Okay, we could also think about doing that as well, but the market shouldn't go above Monday, and we shouldn't have bars closing above Monday if Monday was determined to be a swing day. All right, if it does happen, it means we've got room to push further up. Then on the pullbacks, you can go long at the trading hour, where it matches a retracement price. If it doesn't, you don't trade. Okay, so that's basically it. As you can see, it's not very complicated at all. My technical analysis is very basic. As you can see, I've just got a few lines there. Even these red lines are a bit, what do you want me to say about those red lines? I can't really say much about those red lines because I don't draw them for everything. This is just something I specifically did for SP 500. This is why the only red line here is you see on the PST indicator here, which is on the price model. Everything else here is like this zone here is something that I drew. This is euro dollar, okay? But we don't have those red trend lines here, as you can see. We don't have them on gold either, as you can see. These are all manual, but on SP 500 I did a special study for it. That's why that's kind of like extending out there, okay? And also down here too. All right, but those are not part of the system. They are my manual drawings on calculations. So understanding the swing day, swing hour, and matching it to a PST price really is a very tight stop loss, and also minimum risk, maximum return kind of a trade. You can kind of like follow it through if you've matched it out. Okay, and like I said, you don't have to use the ATM trading strategy. If you got your own technical analysis, you're happy with it, then you can just use that at the right swing day, swing hour, bingo trades. All right. If you have any questions, queries, something not understood, misunderstood, you can always make a comment on the members area, or drop a comment here, or send me an email and we'll go through it. This was in regard to an email that I got from somebody, so I thought, bringing together the swing day, swing hour with a PST, how we all use it together, was probably useful to someone.